Hi, everybody. I'm going to ask you to hang on for 1 minute. We had a slight technical issue. Michael should be on any minute now, but it's a little error on my part, so I apologize, but we'll get going 1 minute.
Josh.
Hey, I just threw you straight on here, so sorry for that. That was my error. I apologize.
No problem.
How are you doing today?
Good, good. How are you doing?
I'm doing well, thanks.
Awesome.
So yeah, so we're live, and appreciate you joining today, and look forward to the conversation. I know we've continued to touch base on and off, and topic today is insurance at the inflection point: 5 trends reshaping strategy in 2025, and going over the mid-year report that you and some of your colleagues put together. But maybe just for those who aren't familiar, you could give a little bit of your background and maybe a little bit on the firm as well.
Yeah, absolutely. And thanks for having me on today. So a little bit about the firm, Simon-Kucher and Partners, 40-year-old strategy consultancy, really focused on topics related to growth and growth strategy. So we cover a number of different industries, that are out there: consumer goods, retail, pretty much everything you could think of. And I run our insurance practice in North America. As a part of the work that I do, I cover the whole insurance ecosystem, which gives me a unique sort of perspective, meaning that I service not only the insurance carriers, agents, and brokers, but I also work with all of the companies that sell things into the insurance carrier and broker segments. So think about insurtech, software providers, service providers like TPAs, right? We do a lot of work around monetization and pricing strategy for those in that latter category, and how they can effectively sell things to carriers. And on the carrier space, we do a lot of broad-based insurance strategy work. Prior to this, I was at CNA, running their innovation function within the strategy group there.
Got it. So is this report sort of just, a typical mid-year report that you would write, or is there kind of a unique aspect to it?
Yeah, I think what we started doing, just to keep the industry apprised of what we're seeing, is producing these types of report on a semi-annual basis. And it's a mixture of those two different segments. So some of it is what we see from the carriers, but it's also what we see from those folks that are selling things into the carriers, agents, and brokers. And as you can expect, one of the things that we're seeing within here is the preparation for AI, right? Both on the side of the carriers and the brokers. So there's some things that overlap, where we see both sides of that equation getting ready, and some are specific to one side or the other.
Got it. And so, is this designed in the way you guys approach your consulting, and
Yeah.
and kind of, I mean, I think it's interesting that you kind of cover the whole spectrum kind of. Does that kind of give you a unique perspective, or do you approach this report in a way that maybe is different, or surfaces some things that others may not be talking about in the industry?
Yeah, I think that we do get a very interesting perspective sort of on the market. So the folks that are members of my team all spend time within industry. It's sort of a precursor to the people that we bring on so that, when we're consulting for our clients, we're doing it from a perspective of having sat in the seat of our clients. We've been there, we've done it from the other side of the equation. But then the other aspect of this is doing the consulting for those that sell things into the insurance carriers. We're very abreast on sort of what are the trends of new technology, where are people taking these things, and understanding, across the different, flavors of any one type of solution, maybe like fraud detection as an example. We've seen the ways that multiple different players are taking the approach towards solving those problems, and then as well as how people are bringing new products to market and how that's changing the way that people are thinking about monetizing and or selling things into the carriers. And I think like AI monetization is a great example of that. We're at the forefront of it, and we're seeing some people get it very right, and we're seeing other people get it, very incorrect.
So is that kind of the number one strategic shift from your client conversations, or are there other things that kind of define
Yeah,
from
and I could take us through, some of the things that we're seeing. From a AI standpoint, it is always in the conversation now, and I think that's probably no surprise to anybody that's listening into the conversation. Everyone's thinking about AI, and there's a lot of sort of pocket watching, I would say, that's going on, and the carriers are asking us, what are all the other carriers doing, and vice versa. I think, the momentum around AI has caught people sort of feeling maybe behind or left out, and that people are moving faster than them. And the real trend that we're seeing on the carrier side, and this is, what we talk about, is the preparation for AI. So carriers have benefited from collecting so much data over their customers for such a long period of time that they've got these treasure troves of data sets. The challenge has then been, the modernization of that data, the logical storing, cleaning of it, and making it in a way that's accessible for the carriers to ultimately like leverage it with the AI that they want to. I mean, AI is no different than many of the other systems. If it's garbage in, you're going to get garbage out. So on the carrier side, we're seeing a lot of sort of preparation to utilize data from an AI perspective and creating use cases. And in many cases, that means, heavy investment in terms of modernization of data warehouses and cleanup to get things, ready. The other thing I would say that we're seeing from an AI standpoint, from a carrier perspective, and this actually holds true not just for carriers, but this is sort of a cross industry thing. We ran some studies around adoption of AI technologies. And, unsurprisingly, of those we surveyed, roughly 90% were planning on rolling out some sort of AI or Gen AI solution in the year of 2025. Now, within that subset of the 90% of people that are rolling things out in this given year, a very small subset of those are actually rolling out customer facing AI or Gen AI solutions. Most are rolling out some form of internal AI solution. And I think, the reason is somewhat obvious. The technology is new, it's exciting, but people are afraid to unleash it, on the customer base. I don't know if you saw what happened on Twitter the other day, but the XAI, went a little bit wild, the Grok bot, right? And there's in risk averse industries like insurance, people are not, so open just to unleash net new technology
Yeah.
directly in the face of consumers, although it has many really appealing use cases.
And what about like the regulatory aspect of that, and guidance from NAIC and the commissioners and all that, and understanding maybe how to structure some of the regulations in the future to protect consumers, but then also unlock the value that AI can provide.
Yeah, I mean, I still think it's a bit of the Wild West at the moment, and it's sort of to be seen what kind of regulation is going to occur. there's so much data that already exists about every single one of us that is out there for purchase and use, and insurance carriers have had it for, a long period of time. Now they're just unleashing models on top of it to try and make sense of it and to create better customer experiences. So I think, the regulation that's to follow is going to really dictate sort of what those end use cases ultimately can look like. But I think we're still very early on in terms of what regulation is and is going to look like.
And is the sort of data structuring, data quality issue kind of the biggest, I don't know if roadblock's the right word, but are there others that are big ones that you see folks, working on in order to really be able to get in a place to, bring more value with AI?
I mean, I think that is by far the biggest roadblock. And that was a roadblock for non-AI use
Yeah.
cases as well, right? I mean, it's not a new thing, but I think that it's just accelerated people's idea of should we invest in data cleanup and modernization in order to get more out of our data. And now that you can essentially take what would have used to require post data cleanup, a team of XYZ number of software engineers and devs to create a use case. In theory, you can leverage these GPT models to code some of that much more quickly and bring things to market more quickly, which has just enabled the ROI on that data cleanup and modernization to look a lot better, right? So I think we're just seeing acceleration of what was probably lower on carrier roadmaps in the past and just accelerating it to the top of the list so that they can start to experiment more with these AI capabilities.
And I've seen some of your other presentations and discussions around pricing and things like that. But
Yeah.
given the work you do in that area, how do you see AI impacting pricing strategies and things like that?
Yeah. So that's a really interesting one, and we sort of leaned into this space around AI pricing really early because we saw, with the release of some of these GPT models and large language models, just what was coming, and started doing work in this space early, even pro bono in the beginning, to get experience and exposure to it. And now what we're starting to learn is that it's really going to shift the traditional SaaS-based pricing model on its head quite a bit. I mean, the historical model in most cases was, per user per head, some version of this kind of user-based subscription pricing model. And now you've got this idea where essentially, and we think about it in this kind of 2x2 matrix of basically is the AI intended to augment, or is it intended to replace the individual on the other side of that equation? So you can think about that as being the y-axis, with the top being we're going to replace. Across the x-axis of this 2x2, you start to think about, well, where in the sort of customer value aspect is this? I.e., is this like something that's actually enabling the transaction to occur? So in our case, in the insurance industry, an example of that is like, is this close to the policy issuance step? And at the end of it, can I actually capture some sort of money from the customer? Or am I thinking about something in the back office and streamlining some process that, ultimately affects the customer, but not directly, right? So data document extraction or things like that happen, behind the scenes. Now, what we saw in the early onset of some of these AI monetization strategies was people are trying to deploy SaaS-based pricing strategies for AI, aka I'm going to use a per user pricing model to sell my solution that is meant to replace people. Well, you can see the problem with that is as your solution gets more effective, you actually make less money because there's less people to charge for it.
Right.
People started to figure out some of this, right? And think about like usage-based pricing models and other things. And, in the top right quadrant of that matrix that I was trying to articulate for you, is this world in which you're essentially replacing something that a human used to do outright, and you're also very close to the end sort of, business process. So in this case, like think about a chat bot that can ultimately end-to-end quote and issue a policy, as an example, right? We've removed pieces from the equation where you've got your traditional CSR, who's maybe on the phone, and we're also getting to the point of issuance. And here in this quadrant of replacement and close to the end transaction, we're seeing what is now being called like outcome-based models. So actually only paying when that chatbot is able to actually issue the policy, or insert XYZ outcome-based metric. And it's not without faults and not without challenges, but we're seeing some trends and moves in the AI monetization space towards some of this outcome-based pricing as sort of a guiding light.
Yeah, it is interesting because given what I do, I mean, for most companies, as big as technology budgets may be, the labor budget is a lot larger.
Yep.
So, these companies, I'm sure, would love to be able to get a piece of the labor budget versus the technology budget.
Yeah,
absolutely. And on the flip side, like we've been incorporating some tools and looking at a larger partnership with one company in particular, and they're an earlier stage company, and the co-founder is, he keeps talking about covering his computing power essentially, so it's interesting from that side too.
Yeah, I mean, I think that you just hit on another interesting aspect of it, is basically a lack of understanding of the compute power and cost associated to these AI solutions, and underestimating that when pricing your product. I mean, maybe it's a stroke of genius, or maybe it's just, a lack of understanding, but you've seen Sam Altman, a number of times change the pricing model for the OpenAI solution, $20 a month, $200 a month, and constantly changing it. And part of it could be a marketing strategy that's effective because it gets people talking about it. But I think the other aspect that's probably more truth underneath this is just a lack of understanding of what does adoption look like? What does that end up meaning for my cost to maintain this solution? And how do I push that cost effectively onto the customer in a way that generates a predictable margin and profit for me?
And in terms of some of the strategies that maybe look at it from the carrier point of view or the broker point of view, but some of the strategies that they have been taking to decide what markets they're going to go after, how to sell to customers, how to distribute to customers, etc. Are companies sort of staying the course with what their strategy was before, or are you seeing a lot of pivots based on the rapid pace of technology change?
Yeah, so I'm having a lot of conversations with carriers at the moment around customer acquisition, but then equally as much, I think, at the moment around a strong retention playbook. So, from a customer acquisition standpoint, if you think about like what AI can do, for carriers, there's all this ability in theory to create hyper personalized experiences, right? I mean, historically, if you wanted to create 10, 15, 20 different quoting experiences, based off of user-based personas or some way of identifying an individual, the amount of copy and content you would have to create in order to support these different flows was tremendous. Now that content can be created in seconds, right? So there's no longer some of the human limitations that were necessary in developing these personal experiences. You're now getting more limited by the technology that supports it than the humans that support it. So I think there's conversations that are adjusting around customer acquisition and creating that personalized experience, as well as on outbound marketing as well, right? So how could I hyper personalize the message that gets in front of you, Josh, at the point of, when you're even thinking about insurance, and then carry that through into the buying experience from an omni-channel perspective, whether you're coming in through that carrier's digital channel or through their phone channel, right? The other thing that I think the really wise carriers are doing, and this was in part of our mid-year report, is starting to think about their retention playbook.
Mhm.
So, our research shows that acquiring a customer is around 5x the cost of retaining an existing customer. Especially if you do a really good job at the point of acquisition of getting customers to bundle, the LTV of a customer is really, really high. Now it's no surprise that the cost of insurance has gone up, over the last few years, especially being rapidly accelerated through COVID and the supply chain contractions that occurred during that period, and pushed things up. And now with natural catastrophes, like what happened with the wildfires in California and increasing hurricanes, the concept of like rising insurance is sort of like the norm and what people talk about and hear. With that comes shopping behavior, right? So the average insurance consumer, is really focused on the price of their product. They see a renewal coming, they see the price increasing, and that gives them a reason to go look for insurance. And I think, what we're expecting from the tariffs, assuming that they go into effect, is going to cause or likely going to cause increases in personal insurance as well as commercial insurance rates as well. That's going to cause another boom, we believe, in the upcoming quarters in terms of shopping behavior. And the smart carriers at the moment are really investing in those retention strategies to capture those customers that are likely to go shopping because they're going to get an increase at renewal, doing what they can to capture and retain those strong, customer bases, while at the same time being ready for those shoppers that are going to hit the market. It's a real opportunity, in my point of view, and in our point of view of the carriers that sort of address this opportunity to keep their customer base and to go after the ones that are ultimately going to be shopping as they see an increase at renewal.
And is the technology to predict who the likely shoppers are or where the potential low-hanging fruit is for new customer acquisition
Yeah.
evolving as well, or are there solutions that have kind of been in the market already for this?
Yeah, that's so that exists, right? I mean, there are players that are out there that have been providing these intent signals, attached to these databases that know, a lot of stuff about you and I that you couldn't
Yeah,
possibly believe in all
yeah,
300 something plus million Americans that are out there, right? So you combine, what these data sets know about Josh with the ability to sort of track your behavior over the internet and say, okay, well, Josh just hit 3 different insurance websites and a pricing aggregator. He's showing real intent towards buying some sort of insurance. It's time to now market directly towards Josh and try and capture his business.
yeah.
And so these technologies have existed. I think what's changing now is the carrier's ability to sort of leverage that knowledge, and going back to where we started, create that really, really customized, personalized experience that hits you at that point in time, presents you with what we know about you, what might be appealing to you, and give you an offer that's going to pull you in to go with us versus maybe the other carriers that we, know that you were shopping before you wound up on our page.
Just given what I do from a leadership and again strategy perspective, is there anything that's come out through your research or your conversations that's either a common theme of things that C-suites and boards are struggling with, or maybe there are leadership gaps or other talent gaps that organizations are identifying in the current environment?
I think the traditional, if you think about the insurance market as a whole, right, and you know this better than anybody, at the C level and senior level within insurance carriers, there's a real sort of aging issue that's going on where most of the top talent in the industry is getting ready to retire. And there's really a gap between that top level talent and sort of the entry of folks into the insurance industry to sort of plug that gap. I think that gets exacerbated a little bit with where the market is going in terms of being more tech forward and saying the future insurance leaders, of carriers going forward looks different than what it looked like for the last 20 or 30 years. And that's not to say that, folks that grow up in the insurance industry don't end up becoming that next view of leaders, but I think they need to have skill sets that their predecessors didn't, which is, whatever field that you're in, even if you're the chief legal, HR, underwriting, risk, actuary, whatever it is, you're going to have a deeper knowledge of technology in order to stay relevant and move the agenda forward for your carrier. And I think, historically it was like we rely on the CIO, we rely on the CTO to sort of tell us what to do. And I don't think that that's going to be the case, 5 years from now, 2 years from now, and definitely won't be 10, 20 years from now.
And it's interesting about the aging of the industry because I mean, there have been discussion, not just in insurance, but some other industries, silver tsunami, peak 65, whatever you want to call it. But it's still hasn't seemed to quite have happened yet. And I'm not sure anyone's produced research or data that shows it, because probably a lot of people would be trying to figure out how to monetize it. Have you heard any more, either from a business perspective for the carriers or from the talent perspective?
It's interesting. I can't point to any specific report, that talks about this, but I can go back to my days in carrier life where it was something we talked about, and every carrier that I go to talks about it. And I reflect on sort of the ability for us to bring in young talent in Chicago, around insurance is challenging when you have Google and other, maybe sexier companies or industries to go into than insurance typically is. And I even see this on the consulting side as well, right? Attracting someone to want to do insurance oriented consulting is difficult when you've got consumer goods and other things that people just naturally can relate to better, right? So I feel it. I feel like I've felt it my entire career, but I don't have the data points to substantiate, this myth that has proliferated. And it's a great point that you bring up.
Yeah. Are there any other key findings from the report that we haven't discussed that you'd like to touch on?
Yeah, I mean, there's a number of good things in here, and I'd love to, spend more time with you, on some of these other items. I'll hit on the others that we didn't touch on quickly. We're seeing, a real move of insurtechs and service providers in their sales motion, thinking about needs-based customer segments. So not all carriers are created equally. Carriers don't think about procuring services in the same way. They might be in the same space, both selling small commercial insurance, but the approach that they take to that typically indicates the way that they're going to buy products. We've worked with a number of folks to think about that sales segmentation and customer segmentation strategy that helps sales forces to be more effective in how they're going to market. And we're seeing folks get better at that. On the carrier side, we're also seeing a movement from individual sales and thinking about Josh as a customer to thinking about the household as a customer. So how do you think about the risk of the household versus the risk of the individual? And I think that goes even further when you start to think about self-driving cars and things that are going to happen in the future, and moving from insuring the individual to insuring the vehicle, and what are the impacts that that's going to have. But when you think about the household as a whole, the LTV model becomes, and the approach to selling, cross-selling becomes very different in assessing the risk of a household and the opportunity than thinking about the individuals that were within each of those. And then finally, the last piece is just we're talking to carriers a lot right now, and brokers conversely on sort of like the compensation structures between the two that motivate both to be sort of in equilibrium. Like if you think about it like a teeter-totter, if you're a broker and you want to place one more piece of business, Like, why do you choose to do it with one carrier versus another? And at what point do you choose to move from one to the next? Getting that equation in equilibrium. And it's not just about compensation. There's a number of different elements that go along with it. Ease of doing business, relationships, and all these things that actually typically rank ahead of compensation as the primary driving factor. We're hearing this come up more and more as people are trying to shore up their distribution strategies.
So I know we started a little late, and I think we come up on time. Do you have
Yeah.
to run?
Yeah, I do. This has
Okay.
been great though, Josh. Yeah.
All right. Got time for one more? Or you got to go.
I could do one more.
So I guess the one more I would ask is, a lot of people pursue disintermediation strategies and not with a ton of success. Do you think there's any greater chance of that happening with this pace of change?
By
And
disintermediation,
yeah,
do you mean more carriers writing direct than
yeah,
through
either writing
agents
direct
and brokers?
or trying to
Yeah.
cut agents out of the loop. Or
I don't think so. I think the notion that, the agent is dying has died on its own. And I think
yeah,
it's more about back towards the effective partnership and relationship of that. I mean, even with the advent and growth of AI, people are people, right? And so, like, across the country, there are folks that just want to do business with their local agent, and that's never going to change, right? And so I think it's more about how people think about the partnership with the agents and the brokers than it is truly this view of direct disintermediation. But it doesn't mean that people won't stop talking about it. It's a catchy thing to say.
yeah. I mean, we're using some AI interviewers, just voice only,
Yeah.
for some of our searches for initial screenings. And it's fascinating because people, once they sort of get a question or two in, they're talking to it just like it's a human being.
Yeah,
Right.
right. Yeah. There's going to be a
Right.
lot of that. That's the scary thing, it's what you see online. Is it real? Who you're talking to on the phone? Is it real? And when you go back to that question of regulation, I think there's going to be some rules around, and hopefully some rules around that to help protect, the consumer.
Anything else before you got to run?
I'm good, Josh. This was great. Thanks so much for
All
having
right.
me on.
Thanks
I really
again.
appreciate it.
All right. Take care, Michael. We'll see you
All right.
later.
See you again. Thanks,
All right. Bye
Josh.
bye.